60 days on the KYF that we just, we call it the KYF instead of the KYC or the KYB, we call it the Know Your Farmer. So 60 days for the KYF process and the underwriting process, 60 days. So for them, it was just pretty easy. The logic was like, if it's going to take us too long and time is money, so it's going to cost us a lot, we're going to focus on these super huge producers that are going to give us the best commission.
So you mentioned before the story between, like, say, Heineken, Victoria. Can you put this example on this on your statement?
Yes. For example, these lenders, let's say they have two options: Heineken, Driscoll's, or Nestlé, or super huge producer, and they have Victoria, that it's a small farmer in somewhere. And they say, it's going to take me 60 days to analyze Nestle, Driscoll's, or Heineken, the same 60 days to analyze Victoria. So I'm going to put my efforts into these huge producers. And sorry, Victoria, but I'm going to disregard you because I don't have more time to serve you. But bringing down the process to less than 5 minutes, then you untap scalability for all these hundreds and thousands and millions of farmers around the country to be seen for a lender. Because right now, they don't have to choose between serving the huge or the small and medium. They have time to serve everyone. And that visibility just increases your probabilities of getting funding. So farmers and, let's say, regular people, they don't have to be technical. They just have to be willing and producing and be good at their work. They can be seen and they can be valued, and they can be seen now for their potential, and they shouldn't be seen right now just like a sign of risk. So that's what we're changing.
Amazing. Empowering the farmers.
Exactly.
The small and medium farmers.
Exactly.
Yeah.
Exactly.
Cool. And now we'll talk about the policy. So what is one policy change that would instantly accelerate the response of the agricultural lenders?
Yes. So if nothing changes, there's going to be a policy that it's going to take place in July of this year. And this is asking for lenders in the U.S. to take more than 20 data points on every single loan that they do to small and medium businesses, including agriculture, including farming. So lenders will have to collect more information to be compliant with the regulator. So that work today takes so much burden. Like, as I say, everything right now is in human-centric flows that they will require more people, invest more money or more operational costs to comply and be in line with this new regulation. With Agxes, they can have all this information from the beginning because we step in since the KYF process. So we collect all the data from the beginning to the servicing part. So everything is documented, everything is standardized, and you are not prone to human errors. And also we are disrupting how do we create value? Before, if you wanted to loan more, if you want to deploy more capital into your community, you needed high operational costs. So you need more people for more loans. With Agxes, you can provide more loans with less cost because the technology, as you use it more, the marginal costs goes down. So that's how we are created value. We are disrupting the curve of costs and value creation for a lender.
One thing that I was thinking about as we're talking now is with the use of LLMs, and sometimes we have enough data that can cover, but sometimes there's happen some hallucinations during out this process.
Yes.
And collecting this data, and you ask for LLM to do a certain task and you don't have that data. And then how do you deal with potential hallucinations during this process?
Yes. So we're doing a deterministic model. So we are using real information. We are using real examples and real cases. So we don't have that. And that's how we are avoiding these potential scenarios with a deterministic model.
And how do you maintain the model transparency when every loan file is different?
That's a very good question. So, as I was explaining, Agxes will help in the standardization. So every lender has internal policies. These internal policies are compliant with the authority. But right now, why this issue comes along is because the process depends on a person, and the person can decide to follow the process or not follow it very good or make some exceptions. With a system like Agxes, there's that human mistake or that human subjectivity, it's taken out. So you follow a process that it's standardized, that you can demonstrate at every single stage how the decision was taken and what was the thinking process behind it, because it complies with the internal policies of the lender. So it's completely transparent, and you avoid all the complications that are linked to, let's say,
Human error,
discrimination also.
politics,
Women. It's very well studied that women have less attractive conditions for loans. Women pay higher interests than men, and there's a lot of literacy about that. So if now you can have that very well documented from the beginning, and then you are able to apply the same rules to every single requirement or every single farmer, and you can prove that through the system because everything is documented step by step, then you don't have that problem anymore, and everything is transparent, and you don't have to see who made the loan or who decided. It's like
everything's clear.
Everything is clear, yes.
Interesting.